The deadline for Russia's $117 million interest payment on its sovereign bond passed yesterday. Russia's finance minister said Moscow had made the payment, but was waiting to hear if it had reached the respective American bank, blaming U.S. sanctions for the situation that it's in. But Reuters reports say no payment had been received by yesterday's close of trading in London. We are now in the 30-day grace period for Russia to meet its debt obligations. A reminder that Russia had offered to make the payment in rubles, despite its sovereign bonds being dollar denominated. Fitch has said payment in rubles would constitute a default. Let's get more on this, and I'm pleased to bring in Michael Greenwald now. He's former Senior U.S. Treasury official, joining us live from Florida. Michael, it's great to have you on to discuss the ins and outs of this. As you've heard, Russia failing to make the interest payments on that obligation. We're now in this 30-day grace period. Do you think a debt default is inevitable at this point?
I think it is. I think the costs on Russia are mounting and time is running out. As you mentioned, Fitch said that if Russia does make it in rubles, then there will be a default happening. Let's remember the last comprehensive default was the Russian Revolution. And before that, the last time was 1998, which triggered a financial crisis. So I expect that Russia will not be able to make those payments in dollars.
Okay, so talk me through the implications, because what we have right now is the world's most prominent reserve currency, that is the US dollar, essentially being used as a geopolitical weapon. If Moscow does indeed miss these payments, what contagion impact might we see on Western financial systems? This is a clear and present danger, a real risk that investors are now looking at.
Well, I think we're clearly in a very deep era, a new era of financial warfare. And there is the creation of a new financial order that's happening before our eyes every morning. And so as each day goes by, you're going to see really two new systems forming, one of China and Russia and Iran and authoritarian governments having a financial system, and G7 like-minded governments with a different financial system. So even though the dollar is dominant during this period, that weaponization will take its toll.
And speaking of weaponization, what sanctions pressure remains left? Last time we spoke, it was around the same time that the United States moved to ban Russian oil imports. How much further could this go? How much more pain could the West inflict on Russia's economy?
So there are plenty of costs more to inflict on Russia. That could include the Russian stock market, which remains closed. That could remain blocking the Russian government, which would basically sanction all state-owned companies. You could ban all new investment going into Russia. You could enact a full financial embargo in Russia, and you could go after sanctions evaders, which would be key.
And Michael, I also wanted to ask you about another issue that we've been following this week. Saudi Arabia considering pricing oil in yuan. Analysts that I've spoken to this week say it's a head fake. They say it's symbolic at best, and USD dominance is not in question. But what's your view?
Well, I think we have to be careful not to be complacent regarding the dollar. The U.S.-Saudi relationship is at a tipping point. China is using this moment as a strategic opening, given the emergence of this new financial order since the Ukraine crisis. So even the potential discussion of converting transaction to yuan, which I do believe is unlikely in the short term, it's a major risk. And it's really a shot across the bow. The real is currently pegged to the dollar. FX reserves are in dollars. 80% of global oil sales are in dollars. The Saudis have traded in dollars since 1974 in the Nixon administration. So just the discussion shows that the Saudis are fed up with the United States because of lack of intervention in Yemen, Afghanistan, and the Iran deal. So we can't be complacent about the dollar because China is going to look to seize this moment.